Hi, this is Padraig here again from the YouTube channel, Facebook group and social media platform for all PAYE workers and their employers to ask and get answers to their payroll, PAYE and work-related questions. The YouTube channel, Facebook page and groups are all called Payroll Matters in Ireland, and new members and subscribers are always welcome. Today I want to talk to you about taxation of illness, occupational injury and partial capacity benefits and how DSP payments in general are taxed. Taxable Department of Social Protection DSP payments are liable to income tax but not liable for Universal Social Charge USC or pay-related social insurance PRSI. If a taxable payment is your only source of income, you may not pay income tax. This is because your tax liability does not exceed your tax credits. For example, in 2024, a single person with standard tax rate credits and standard income tax band can earn income in the amount of €360 per week without paying income tax, as outlined in our video called 2024 Net Pay Take-Home Calculator for Ireland. Net pay is equal to taxable pay less USC and less PRSI and less income tax. If you have a DSP payment and another source of income, you may have to pay tax. If, for example, you are single with the normal single person's tax credits and tax band and have income in excess of €360 per week. As a PAYE taxpayer, revenue reduces your annual tax credits and rate band on your tax credit certificate, your TCC, to take account of any taxable DSP payments. You can view, print or download your TCC in My Documents in My Account on revenue.ie. If you have any difficulty finding them or signing in to your Revenue My Account, you can watch our PAYE guides here or here. Revenue will make an amended revenue payroll notification or an RPN available to your employer or pension provider so they can collect any tax due through your payroll. Example, Martin has the following tax credits and rate bands for 2024. His annual and weekly credits and rate bands from the 1st of January 2024. Tax credits, annual €3,750, which equates to weekly of €72.12. The rate band of €42,000 taxed at 20% and the balance taxed at 40%. That equates to weekly amounts of €870.70 at 20% and the balance taxed at 40%. Martin's pay from his employer is €650 per week. His weekly income tax is calculated as follows. Taxed at 20%, €650, which is €130. Taxed at 40%, zero. His gross tax is €130. Deduct the tax credits of €72.12, which leaves him with a tax payable of €57.88. The DSP reports to Revenue that Martin is now getting a taxable payment of €208 each week. Revenue reduce his annual tax credits and rate band on his tax credit certificate to take account of the taxable DSP payment. These are the adjustments of Martin's annual tax credits and rate bands. Weekly DSP payment is equal to €208. Annualized DSP payment is €208 multiplied by 52 weeks, which is equal to €10,816. A rate band adjustment. His current annual rate band is €42,000. They deduct the notional annualized payment of €10,816, which leaves a revised rate band of €31,184. The tax credit adjustments. Current tax credits of €3,750. Deduct 20% of notional annualized payments, €10,816 multiplied by 20%. is equal to €2,163. His revised tax credits are €1,587. Martin can see the new amounts in his tax credit cert, his TCC. Revenue send a revised RPN, Revenue Payroll Notification, to Martin's employer. his adjusted rate bands are tax credits, annual 1,587, which is equal to €30.52 per week, and his revised rate band is 31,184, which is taxed at 20%, and the balance at 40%. That's €599 taxed at 20% per week, and the balance is at 40% per week. Martin's pay from his employer still is €650 per week, but it's now calculated for income tax purposes as follows. Tax at 20% is €599.70, which is equal to €119.94, and taxed at 40%, €50.30, which is equal to €20.12. Gross tax is €140.06, and deduct the tax credits, which are equal to €30.52. The tax payable is €109.54. Martin's income tax payable has increased to take account of his taxable DSP payment of €208. There will be no change to Martin's USC and PRSI payments on his pay of €650. You can see here that you get the same answer by using our take-home pay calculator 2024, which, as we pointed out earlier, you can find here on our channel. In this case, you simply add the €208 to the €650 to get a taxable income for the week of €858. The way that revenue demonstrated is by showing what happens in reality as the Department of Social Protection do not deduct tax directly from DSP payments. In this video, all references to illness benefit can be taken to also mean occupational injury benefit and partial capacity benefit. The taxation of the benefits is similar. Illness benefit, IB, occupational injury benefit and partial capacity benefit are paid by the Department of Social Protection, the DSP. These benefits are liable to income tax. They are not, as we said earlier, liable to Universal Social Charge, USC, or pay-related social insurance. How illness benefit is taxed since the 1st of January 2019. The DSP tells revenue the amount of your taxable illness benefit. Any tax due from your illness benefit is collected by reducing your tax credits and rate band. This will be shown on your tax credit certificate, your TCC. Revenue will make an amended revenue payroll notification, an RPN, available to your employer so they can collect any tax due. While you are on sick leave, if your employer pays you, you must tell them the weekly amount of your illness benefit. If your employer does not pay you, you do not need to tell them the weekly amount of your illness benefit. In both circumstances, your employer will use the latest revenue payroll notification, RPN, issued to them by revenue. The taxation of maternity, adoptive, and health and safety benefits. Maternity benefit, adoptive benefit, and health and safety benefit are liable to income tax. These payments are not liable to Universal Social Charge or pay-related insurance, PRSI. We have a video done on how this is taxed here. Our next video deals with taxable DSP payments and tax-exempt DSP payments. So, can I request that you please consider liking this video or subscribing to this channel if you have not already done so, in order to keep up to date with payroll matters in Ireland and to help us continue making helpful videos like this one. So, as we said before, subscribing costs you absolutely nothing. Don't forget that you can also join the Facebook group Payroll Matters in Ireland if you are not already a member. Thank you to everyone that has already hit that subscribe button. And thank you for watching, and I will see you next time. So until then, slán agus beannacht libh go léir.